Yo guys, welcome to the new video. In this video, I will exactly explain how I took this trade using the liquidity inducement theorem. So, first thing you should understand what is liquidity in the marketplace and how to identify the liquidity flawlessly. So, if the structure is moving in the upward direction, means uptrend, the liquidities that are in the top of the trend are called transactional liquidities. Means the transactional liquidities are nothing but which give the retracement. The transactional liquidities are not powerful than the inducement liquidities. These liquidities are called inducement liquidities. The liquidities that are opposite to the moving trend are called inducement liquidities because this is where the money is. This is where the money is. So the transactional liquidities are not this much powerful as the inducement liquidities. So I will explain this trade, how I took this trade. So first thing, transactional liquidities are retracement liquidities, and this type of liquidities are continuation liquidities. So first I identify the trend. The trend is coming downwards. If you see, the trend is coming downwards. Lower high, lower low, lower high, lower low. So I have just identified the trend and I wait for the inducement in the marketplace. I just waited for the inducement in the marketplace. So this is where the inducement is happened for the structure. Can you see the speed and aggression? This is the speed and aggression inducement, and it is also the session opening. For every session opening, there will be a huge speed and aggression of candles. If you see the price action compared to this price action and this price action, this is very violent price action, right? Just because to induce the retail people. So what the retail people think, if the resistance is broken, they will think it will buy, right? They will buy the market, but it is just the liquidity gap. This is how the market operates from the liquidity pool. See, for example, this is the range, right? This is the range high liquidity pool, the range high liquidity pool taken, and then the range low liquidity pool taken, and then the market reverse. This is how the market operates from the liquidity pool to the liquidity pool. So this is the range liquidity got taken out, and there is another confluence also for every session openings, whether it's the Frankfurt session opening, London session opening. For every session opening, there is a liquidity clearance. For every session opening, there will be a liquidity clearance. Not this day. If you look at the past, at any day, there are a lot of liquidity gaps. If you see here, this is the news. This is where at 12:30 is where the Frankfurt session is opening. If you identify the liquidities before the Frankfurt session, same checklist, you should identify the trend where the market is moving. The market is moving uptrend, right? So you should just draw the liquidities, inducement liquidities. Can you see? After the inducement liquidity is taken out, the market reverse. The win rate is crazy if you follow the strategy flawlessly. It has very good win rate. Yeah. So what I just did is I just waited for the liquidity to be taken out at the special timing, session opening timing, and I waited for the break of the structure. Many people, many retail people and smart money people will wait for the break of the structures at this level, because they think there is a order block and bullshit. These order blocks are, it's a fake concept, to be honest. So I wait for the liquidity grab. After the liquidity grab, then I wait for the break of the structure. I wait for the break of the structure after the liquidity grab. This is where the break of the structure happened. So after the break of the structure, I will mark the order block. I will just mark the order block and have a sell limit here and stop loss just above the order block, and simply I will again target the higher time frame liquidity pool. This is the same concepts I had took this trade. So I'm done for the day currently. So if there is any trade after this liquidity pool is taken, I will be in the buys targeting this liquidity or even this liquidity. So this is how I trade the market from the liquidity pool to the liquidity pool. So basically same like the uptrend, same for the downtrend. For example, if the market is moving like this, then these becomes the transactional liquidities. These becomes the transactional liquidities because the direction of the market is downwards, right? So these are now the transactional liquidities, and these are now the inducement liquidities. These are inducement liquidities, these are the transactional liquidities. So If the inducement liquidity is taken out, you should sell the market. If the transactional liquidity is taken out, you should buy the market up to 50% of the range. Up to 50% of the range you can buy the market, because the transactional liquidity is specially for the reversals, not for the continuations. If the transactional liquidity is taken out, the price won't continue. It will only continue if there is a higher time frame inducement liquidity is taken out from the past. If there is a higher time frame inducement liquidity taken out the past, it will move. HTF inducement liquidity. So higher time frame inducement liquidity is more powerful than the transactional liquidity. So this is the exact concept I use it for this trade. Same thing, there will be many trades in the past. If you see many trades, if you just plot the structure, I can show you many trades will be there. Just mark the structure, higher high, higher low, higher high, higher low, right? You just wait for the inducement liquidity grab and enter. Can you see the speed and aggression? Speed and aggression. What's the timing? 16:00. So new hour opening. For every hour opening, there will be a liquidity grab too. Liquidity grab, mitigation, extra confluence. There will be a lot of confluence, because this is how the algo moves, and this is the break of the structure. Let me plot you the break of the structure clearly. This is the downtrend. This is the break of the structure. This is the mitigation. Exact checklist. I plot this trade randomly. If you follow this checklist, see sniper entries. These are all sniper entries, small stop losses. Same thing, plotting the structure, identifying the way the algo is taking the stop losses, then moving the market. If you want to target the high time frame liquidity, you can target the day size. Lot of sniper entries, guys. If you just understand this concept, see lot of entries. So hope you like this video. If you want to learn deep dive about these concepts, I have opened the mentorship, and October, for the October boot camp, I am taking the students. To join, just go through the comment section and message me on the WhatsApp. I will add you in the private group. Peace, guys.